there's nothing that beats experience.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, I had a question about people who come to trading. So trading exposes a lot of our weaknesses, as we all know, in terms of money, self-worth, and stuff like that. But I find that a lot of people who come to trading are already successful in a business or as a CEO or executive or something like that, right? So why do you think they struggle with trading so much, even though they have this probably a pretty healthy mindset around money and wealth and success and stuff like that?
Yeah, it's a really good question. And I'm sure you've probably run into this where, like, well, I can speak for myself and many of the traders I talk to, it takes them a while to figure out, what are the skills that you need to apply in trading, right? Like, what do you need to do? Mm-hmm. And the interesting thing to me is that most of these skills that you and everyone else who you eventually, like, if you keep going, you eventually will get it, I believe. There are shortcuts, like you can ask somebody, you can get some help, but, they can give you the answers to the test. But the overarching theme is that, like, if I'm a business person, I may say, you know what, the way I'm going to crush my competition is I'm going to have stamina. I'm going to be super aggressive. I'm going to price my product, like, say, let's say, most of the time with businesses, you can price your product really, or your service really low, so you beat them on price and you get volume, or you can price it really high and outstanding service, right? When you think about it, those are two of the easiest ways to do it. And you're usually rewarded if you are aggressive, right? So if you are an aggressive advertiser, right, and you don't get it totally wrong, it's probably going to work, right? Mm-hmm. If you are, there's a lot of ways. If you take the money and run, right? So if you take the money and run, then you as a business person, then you will do well. And in fact, I would argue that most of these things that we have, these instincts, they're actually called cognitive biases, right? And they study them in psychology. I've done a whole course on these cognitive biases that are sort of our inbuilt algorithms that we apply in everyday life and in business. If you were out in the forest, a hunter-gatherer, these were what would serve you really well. All of these things, almost without exception, will kill your trading bottom line. Mm-hmm. So to me, that's that's the big thing. The big thing is you kind of have to unlearn. Like, so the classic example is the hyperbolic discounting. So, and we've done this before. You've seen me do this, where we have a group of traders and I have an envelope. I say there's $100 in this envelope, or 100 pounds or whatever. And then it's yours. Here, take it, and give it to a trader. And then I say, now I've got this other envelope over here. Sorry, my dog's going a bit crazy. I don't know if you can hear that. This other envelope over here, and you can actually take what's in it and trade the 100 pounds that you have in hand, and trade it for this envelope. Now, I don't remember. It's either got nothing in it or it's got 200 pounds. Would you like to make the trade? Right? And the only time I've ever done that experiment where someone actually wanted to take the trade, and by the way, it always had 200 pounds in the second envelope, or $200 or whatever. The only time that's ever happened where I did that and they took the trade was when all of the traders convinced her to swap it. You know what I mean? Yeah. It wasn't her decision originally, right? Yeah. So every time they always take it, and then they go, "Oh, I should." And that is basically one of the big ones for traders. Is if you have a trade and you're in profit, it's so easy to just take the profit, right? It's so hard to hold on to that to see if it's going to keep going and give you more profit, right? Mm-hmm. Trailing exit, right? Trailing exit. So these are the sorts of things that we have tons of them that are working against us in trading. We kind of have to unlearn these instincts or these biases, I believe, to do trading well. You can get lucky, like I did the first time I traded currencies with my friend, where we tripled our money on the second night that we're trading the USD Swissy. Like, all that stuff happens, right? There's stories like that. But of course, we lost the money 3 days later. On Friday, we were done, right? My money was gone. So there's those sorts of things where you learn these hard lessons. But overall, I believe we're built not to make money trading, unfortunately. What are your thoughts on that?
Yeah, well, before I get into that, why would people, or explain to people why they should probably take the second envelope?
Oh, because the reason why you should take the second envelope, because essentially it's the same reason why using a trailing exit will in general make you more money than having a profit target. Well, mathematically, okay, so in decision theory, there's they use this in economics. It's total BS, by the way, and psychology knows this. So if you look at economic theory, they will say, you know that it's either $0 or $200 in the second envelope. So therefore, the expectancy of that envelope is 100, right? It's 100, which is the same as the envelope you have in your hand, right? So there's really no difference according to economic theory, there's no difference between swapping the envelopes. And in fact, you actually have a 50-50 chance, or you have some chance, who knows if it's 50-50, of increasing it, but the expectancy of that envelope is equal to what you already have in hand, right? So that's the same as moving your stop loss to break even or something like that, and then allowing the trailing exit to pop you out of a trade after the market keeps giving you more profit. And obviously, mathematically, if you're using a trailing exit, you're allowing yourself to have unlimited profit. However, if you give yourself a profit target, you're cutting off your profit, and you're never going to allow yourself to have more profit than where your exit is. There's a lot of reasons why the hyperbolic discounting thing works against us, but some of them are mathematical and some of them are psychological. I guess that's the way I'm saying it. Yeah.
Okay, cool. Yeah, I mean, I agree. It's definitely the fact that trading goes against our natural instincts, and I think our natural instincts serve us well most of the time. But yeah, in the case of trading, I think you have to flip a lot of those things on its head, and that's kind of hard to do, especially when you've been successful already, and then you have to try this different thing that is not like the success part. Then I think it's really difficult.
Yeah, and your ego can get in the way, especially for males, I've found, right? Like if you're a guy and you run this successful tire business or whatever, so you've been making lots of money selling tires, and then all of a sudden you find yourself losing hand over fist in trading. You're like, man, I'm good at this. Like I know how to make money. What's wrong? Or actually around here, I know people who are like farmers, right? So they're farmers, and then they get into futures that way. Right, so that's part of the deal, right? Like I know people who are in the coffee business, right? So you can use futures to hedge coffee price and make sure your business doesn't lose money. And then in Australia, there's a lot of farmers I know, and they basically get into trading that way. Like you can even trade water futures and things like that. So yeah, like they feel like they know what's going on, they know the market and all this, and then they get in trading like, why am I losing? What's going on here? There are other rules that apply that you don't understand, and most of them go against your instincts. It's so crazy, but actually we know this from the data, right? The 43 million Forex trade study. Maybe we can put the link in this episode. You can read. This is really eye-opening for people who haven't seen this, where most traders actually win more often than they lose. So they studied 43 million Forex trades, and I don't know if it was over a 6 month period or something like that at a broker. And they essentially said, look, the win rate across the board is over 50% for traders. The issue is that their winners are so small and their losers are so big. And so what's happening is they're getting a little bit of profit and they're taking it when they shouldn't do that, basically. You know what I mean? Because they're catching the market going. They catch it, when it turns around. And if you look further, I'll actually argue that most traders are, when the trend is up, they're selling it, and they're actually selling it at the pullback, right? The retracement move. And when it's down, they're buying it, and they're buying it on the retracement move. Like that's typically what you can see from the numbers. So anyway, yeah. So that's just another great example of what happens is our instincts are to just take quick profit. You got it, bird in the hand sort of thing. Just does. Unfortunately, that's not. I've noticed as a Forex trader, it's really good if you can get comfortable with losing. That's another thing. People don't like to lose. People like to win every day. They like to go into work and make money. Yeah. They don't like to go into work and lose money, right? And I lost money yesterday. I'm trading a 5-minute trading system. Some days I'm up, some days I'm down. I get about 6 trades a week, and I'm in a trade right now, and who knows? It's in drawdown right now, but you know what I mean? Like I'm not going to change anything. It's either
Mhm.
going to hit my stop loss or it's going to hit my profit target. And these are the sorts of lessons you have to learn. It's like, look, you got to, you just, there's nothing that beats experience. You get the experience. If you have somebody that can help you and give you the shortcuts and give you the cheat sheet, that's great too. But eventually you'll learn to go against your instincts, I believe. And that's really the key.
Yeah, and you bring up a good point with the farmers. I think that, the farmers do know the industry, obviously, but in between the time that they get the news or the news happens and trades actually get placed, there's like a ton of stuff that can happen, right? There's delays, there can be the order flow can be, whatever. There can be some market makers that do something and hold up the order flow or stuff like that. So it's never a direct correlation. And a lot of people, I think, who get into trading look at the news and say, oh, this news happened, so this has to happen. But no, there's all this stuff in between. So you have to figure out, okay, what's the best way to account for that?
Yeah, exactly right. Like you're a soybean farmer and the soybean market, there's a shortage and soybeans should be going up, but look, there's there's an investment bank or whatever that's shorting the crap out of it. You know what I mean?
Mm-hmm.
Like that's, you know what I mean? That's nothing to do with your analysis. So I believe you can see those things on the chart. I believe that's obvious on the chart, but that's my, that's as a technical trader, that's my belief. So yeah, so it's so true. It's just hard to sometimes get out of your own way, I guess, and see things from a slightly different, different point of view. That's why having a trading buddy that you can talk to and you can go over your numbers and look at things, that can be really helpful too. Yeah.
I think trading from the outside at least seems really easy. So I think people take it lightly also, right? Like they studied really hard to build their business, but then, well, I'm going to learn this trading thing in like 2 weeks, and it doesn't work like that.
That is so true. You're so right about that. Yeah, it's true because it's not roofing, right? Like you don't have to rip a roof off and build a roof. It's not that hard. It's not that type of work. It's kind of like professional sports where if you play professional sports or coach professional sports, so much goes into the preparation so that the game is kind of easy. Like, exactly what's, you've looked at all the different situations and all that. It should be like that. And that's why I always tell my traders, I say, look, this should be boring to you. You should not be excited anymore. Excited is what newbies are because they don't know what's going to happen. So it's exciting, like gambling. Same as a roulette wheel. You put $500 on black and you spin the roulette wheel. That's exciting because who knows what's going to happen.
Yeah.
But as a trader, you should know that over the long haul, you're going to win. You've done your homework. You see this, this, and it's going to take something really spectacular to screw this up. So you know what I mean? Like that. Yeah. So that's my belief is that you should just. I always like to listen to there's a song by the Rolling Stones called Time Is On My Side or something like that. And I love that song because whenever I'm in a drawdown, I'll listen to it. I was listening to it yesterday because I've had a few losing trades in my 5-minute system. And I'm like, it just reminds me, time's on my side. All I got to do is survive this drawdown and I'll come back up on the other side. It's all it is. It's just a math thing, right? And professional gamblers are the same way. We know that, right? That professional gamblers, they look at the long term. They almost see themselves as invincible, as never dying, right? So they exploit these little tiny edges, and they can see far away from here. If they just exploit that little tiny edge, and they keep doing that over and over and over again, they see the result, right? And this is no different from traders. Traders, we do the same thing. We get a little edge and we exploit it over and over and over again. You just have to live to see another day so that eventually the numbers catch up and you're on the plus side. Yeah.
Yeah, totally. I think there was that movie, what's it called? I forget what it was, but it was a movie about that MIT card counting team, right? Who used to go to Vegas.
Yeah, 20. The book is called 21, but
21, 21.
Yeah.
And it's interesting because it just became easy and almost boring in a way. So a lot of those characters, or a couple of characters, had to act out and they had to bring their ego forward and say, "Oh, I'm the best of this team" or whatever. And it's just interesting that happens in trading also, right?
Yeah, definitely. Yeah.
All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.